Welcome to the Always On podcast. I am your host, Duncan MacPherson. On this podcast, our objective is to enable our audience, which are very high caliber fee-for-service professionals, to always be working on their business and on themselves, personally and professionally. And on today's podcast, I had an incredible conversation with Tindall. She's a CPA, a strategic tax planner, and a founder at Dominion Enterprise Services. And she runs a CPA firm that talks about tax optimization strategies for financial advisors and RIAs and other firms in the sector. And I have to tell you, I underestimated not only her prowess and ability, but also the unmet needs and blind spots that exist within a financial advisor's business, because you wear a lot of hats. There's a lot going on, and I'm now more convinced than ever that there are some areas of opportunity leakage regarding tax efficiency, but also from a strategic planning perspective, and this can trickle down to your relationships with clients as well. So I really hope you enjoy this conversation. I hope you get to know Catherine better. And if you do like and appreciate the information, please share it and tell your colleagues. And if you have any ideas for topics you'd like to hear down the road, just let us know. Thanks for listening. Well, as a financial professional, you know all about the fact that there are many key components that go into a sound financial plan. Obviously, asset management, risk management, and of course, tax efficiency. I'm sure it's the same case with you in that tax is by far my biggest expense. I sometimes wonder about the value I'm getting for that investment, but anyway. But of course, this doesn't just apply to your clients, this applies to you as well. And to that end, my guest today is an advisor to advisors. Tindall is a CPA to financial advisors, which is quite a niche. Catherine, how did that come about?
So for my background, I've basically always been in tax, and I knew pretty early on in my career that I wanted to have my own firm. So I worked at other firms with the view of, learning what I liked and what I didn't like. And so when I launched this firm years ago, I really wanted to have a planning focus in the practice, because that was the thing that frustrated me the most, was getting to the end of the year, doing the tax returns and saying, hey, why didn't somebody tell this person that they could have done X, Y, and Z? Or this should have happened during the year, but I'm looking at a end of the game scorecard. There's nothing I can do about it. And so when I started the practice, the initial emphasis was I want to be a planning first practice. We started off in a just generalist, serving, people who had tax planning needs. So like real estate investors and business owners. And I picked up a couple. I've always worked with financial advisors, but I picked up a couple as clients. And, a couple years in, I realized that of all of the clients that we had, they were the ones I liked the best in terms of, they really get it quickly. They're interested in understanding the why, and that the value that we bring in the tax planning for them is value that they then can deploy in their own practice and relationships with their clients. And so I enjoyed all of those pieces, in addition to the fact that they have unique challenges that other businesses don't necessarily have because of the regulatory environment they're subject to. That doesn't translate into, realtors don't have the same problems that they do in terms of how they earn their income, how they can assign it, and just some of the nuance that goes on in how they operate. So that's how we got started with them, and they've just been a wonderful group to work with.
Yeah, I have to agree, because of course that's our addressable audience as well. And I mean, financial professionals, it's such a noble calling,
Yes,
a big responsibility. And what's great is that they're entrepreneurs. They think like business owners, which means, among other things, they value advice. They focus on what advice is worth, not what it costs. And they take direction. They don't think they have all the answers or they're the smartest person in the room. So, okay, that's great. What is your value proposition then, if you could sort of summarize that?
Yeah. So basically, I always tell advisors we're almost more like a financial advising practice than like a typical CPA firm in the model of how we deliver services. So I always start off with an assessment engagement, which is I know what a lot of advisors do. And basically at the end of the assessment, we come up with a CPA is equivalent to a one-page financial plan. Here are all the pieces that I see going on in your life from a compliance perspective on the taxes, from a bookkeeping perspective, if there's any issues from previous filings, and then really looking towards the future. That's the goal with the engagement of where are you trying to drive the practice to? Are you going to be doing acquisitions? Are you going to be selling your business? Are you going to be transferring to a second generation? Are you a couple years in and I deal exclusively with US advisors, S corporation status, entity changes, what's on the horizon for you and what do we do this year and then the next couple of years to make sure that you're going to do that in a tax efficient way? Because I'm always optimizing for three things. And the first thing is that any moves that we do, I want it to be adding to the value of the asset that is the practice. So I'm not going to take moves that are going to decrease the value in the practice. So anytime I'm recommending something, I'm thinking for that. The second piece is not running out of cash in the business because a lot of tax moves, it's a cash game. And so making sure that we're playing the cash game efficiently with the payments and with the harvesting of deductions and the different moves we make. And then the last piece is just the advisor's time. Because for a lot of them, when you consider the return on effort, I'm not going to suggest something that's going to take 2 hours a month if I know that 2 hours is better spent prospecting and, being active in the practice versus trying to do something that's going to have a slight tax benefit. So those are the three things I always look at. But then once we do those assessment engagements, they can walk away. They can take it to another CPA if they have an existing CPA, or, a lot of it is sometimes if people aren't quite ready to work with us all the way yet, at least gives them, some good value up front and lets them see, oh, okay, so here are break lines and this is when I need to make this change or that change and reach back out to Catherine's team. And then from there, we do usually a catch-up planning engagement because they haven't been working with us. So there's usually things that need to be changed. A lot of times it's entity structures or compensation. And then from there, we switched into a subscription to the firm, which is, it's based on what we find during the assessment. And it's about the maintaining and being proactive about the planning items that they have in their life, and specifically making sure that we've got a good pulse on what's going on with the income tax liability. Because I find a lot of tax professionals they'll keep figuring out the cash burden of the income taxes and the filing of the taxes as one thing. And in reality, it's two things. And advisors need to know way ahead of time what that tax bill is going to be in order for them to have the cash to support it and help them when they're making their strategic decisions of, am I going to do retirement contributions for myself? Am I going to hire that next person? If you're having to sign away 30% your cash, you need to know what that number is. That's a huge thing to budget for. And if you don't know that, it's a huge, like you said, it's for most of these advisors, like it's one of the biggest expenses that they have past labor. And so you need to know what it is. And that's a big part of what we maintain and have a plan around dealing with it and paying for it so that it's not a surprise.
Excellent. Well, and I'm sure everybody listening in, like me, you can read between the lines. Every time I speak with you, there's what you say, and then the undercurrent is you know what you're talking about, and you speak the financial advisor's language, like you understand the lay of that land on many levels, not just the day-to-day and the strategic planning, which must be huge, but also starting to think about, okay, end game, exit strategy, enterprise value. I mean, there's so many elements that go into your insight and wisdom, and you can sense that in the midst of your words. So I really do respect that. And while I'm thinking about it, I think we need to invite you to participate in one of our masterminds.
Yeah.
Which is a group of high caliber advisors who are strategic planning, scenario planning. There's an element of friendly co-opetition and energy, but I think you would bring a perspective that maybe they're not considering fully. And I want to get into that more a little bit later on. I'll also say for people listening in, I highly encourage you to go and visit Catherine on LinkedIn and take a deep dive and look at her progression, because she demystifies what it looks like to interact with her and how you can compare and contrast her to your current provider. I'm saying this because it's very enlightening, but for me, what got my attention was You said it's not uncommon that you can help a financial advisor save $30,000 a year in taxes. And for me, I immediately say, okay, what does that look like over 10 years?
Yeah.
I mean, $300,000 plus or minus invested into the business or invested in some other way, or just having that dry powder. I mean, you know what I do every now and again? Just to give me some context on time, I think about how fast the last 10 years have come and gone. I'll go on to Google and I'll say, what were the top news headlines in 2014?
Mm-hmm.
And it'll show the top 10 and I'll go, wow, first of all, history kind of rhymes. Like it sounds very similar to what's going on today on many levels.
Yeah.
But it doesn't seem like those events happened 10 years ago.
Yeah.
So as a lifelong planner listening in, imagine if you optimized your approach to tax. So is there anything else that you see in terms of patterns with the advisors? Liberation, there's got to be some qualitative benefits from finding these little, opportunity leakages and things like that. I'd love to hear some of that.
Yeah. And I'd say, my perspective is people always say, don't let the tax tail wag the business dog. And my perspective is, in order for me to do well with the tail, I really have to get the whole dog, right? Like you don't want a vet that only knows how to treat the tail because it's all kind of one thing. So I find for a lot of the tax, advice that I give and a lot of the advisors that I work with, the main value that they're taking away is more like the peace of mind, because I think the way that the relationships typically work with tax professionals is they're very passive and they're very, you bring me your paperwork, I'll file your paperwork and tell you the horrifying check you're going to have to cut to the IRS. And I think for a lot of advisors, a lot of the value that we bring in the relationship beyond just the tax savings is you're not having to manage this function in your life anymore. That there's somebody who's like, I will proactively go into your QuickBooks and pull the reports and do forecasting and reach out and say, hey, I saw you, this is when you're getting your big quarterly checks. I went in, took a look at what's in there. Is it all updated? Okay, great. Ran a new forecast for you. This is what we're looking at. It's on trend with what we were thinking. Everything's still good. Any changes? Like that kind of a relationship versus, passively figuring it out after, or how am I going to pay for this $100,000 of taxes or just any of those kinds of things. Like it actually, what made me frustrated was that in a lot of these typical relationships is like all of the power that I have as a tax professional to help people actually make changes to improve their situation is behind this compliance requirement. And if you can shift it where it's broken out of that and really compliance is the end of the relationship, after we've done all our work during the year, then we do the tax returns. It unlocks that value for the advisor for them to not have to be, they don't have to be worrying about it. And it's not in their, even if it doesn't take them a lot of time, it's not in their headspace as another plate they're having to spin because they're spinning a ton of plates. And this is one where it's not a value add for them. It doesn't drive revenue for them. Like it's just a distraction and it's an anxiety creator, like the boogeyman that's under the bed. And it doesn't have to be like that.
Well, and again, I mean, this is just my own experience, but accountants are notoriously reactive in my experience.
Yeah.
It's a small sample size, but I mean, it's so key to obviously be reactive, but also to be strategic and future pacing. Like, where is this all going? And also predictive, like having a process to get out in front of those shocks that you're talking about. So, because again, the world of accounting and the legal world, notoriously complex, probably by design, but there's a signal to noise ratio. And I think if someone's empowered like you to be strategic and to sift through that signal to noise ratio and look for these little gaps and untapped opportunities, it's got to be very liberating for the advisor because they can just empower you. You can go find this and then come back to them with a report and an action plan, I'm assuming.
Yeah. No, that's basically what we do. And, a lot of it for them is I don't, because the value of their time is so high, a lot of things I go after are not, save $1,000 here, save $1,000 there, unless it's things that are easy for my team, like easy for me to offboard out of the advisor's life that we can just execute on their behalf. A lot of the things we really focus on are more structural issues and structural considerations around, how are they growing the practice, the timing on doing certain things, what's their entity structure, how are they compensating themselves? That's a huge area where I see mistakes that cost people a lot of money. And those are the kind of maneuvers where I'm always looking for those bigger unlocks and those bigger conversations and where they are strategically. Because honestly, like when you're in professional services, the game that we play is a year-to-year tax game. And for them, the best way for them to optimize the taxes is if they're in a high inorganic growth practice mode where they have discretionary profit from just operations, and then we're strategically deploying that discretionary profit so that we're effectively deferring the income tax to the future. So it's the same strategy that Amazon used to grow, and for years and years, people complain they didn't pay any taxes. It's that same strategy of figure out that discretionary profit. What are the strategic expenditures? Execute those strategic expenditures with KPIs so that you're not just, we're going to throw 30 grand into a marketing thing and see if it works. And then from there, you're just having a lower profit yield off of the business. And so it lowers the tax burden and defers that tax burden into the future because you're reinvesting into the growth of the practice. But you have to play it on a year-to-year game in professional services. It doesn't work like real estate where it's, there are longer play horizons. So it just ends up, that's really the main mechanism that if you want to save a lot in taxes, that's the main mechanism you've got to go for.
Okay, so I want to unpack that a little bit, but first, just to sort of, I have to ask, what's your favorite accounting joke?
Oh man, I bet everybody's heard this one. I've certainly heard it plenty of times. I feel like there's not enough accounting jokes out there, but maybe it's because we don't get out in public enough. But my favorite accounting joke, or the only one that I know really, is how do you tell the difference? So how do you tell the difference between an actuary and a tax accountant? The difference is when you're at a cocktail party, the actuary will look at his own feet and the tax accountant will look at yours. That's it. That's all I got.
Hey, wait a second. Accountants and actuaries get invited to cocktail parties? I didn't know.
It's funny. I always joke with people, prior to tax season, I've gotten into the habit now when I go places, I won't tell people that I'm a tax person right away. Or if they do press and ask me what, I say, I'm a CPA. And they ask me what I am. I say, I do corporate tax. And then that usually shakes them off. And then if not, I'll start getting the questions of, well, I was going to buy this property and it's in and it just goes into it. And I'm like, I feel like the only people that probably have it worse are dermatologists, where like you show up to places and people are like lifting up their shirt. Like, can you look at this spot for me? Like, do you think, in the middle of like, you have a drink in your hand, like, can you look at this for me? Like, does this look okay? Do you think I need to get this checked? So it's funny. We're going to be popular in 2025, and there's a bunch of legislative changes. Like we'll have our moment, like we did a couple years ago with the TCJA, and then during COVID too. Well, no cocktail parties going on during COVID, but we had our moment in the sun where tax news was actually real news. So we'll see.
Oh, riveting! Yeah. Well, I'm going to share with you my favorite accounting.
Let's hear it.
And I actually dropped this one on my youngest son, and he laughed. I mean, he usually rolls his eyes at any dad jokes, but mine was, okay, and this one. What's the difference between tax avoidance and tax evasion? It's about 7 years. It's not working?
Yep. No, it's good. Good.
All right. We'll see if that one gets edited. I thought it was hilarious, but all right.
Have you ever felt like you're alone on a desert island? Alone, with your challenges, and wishing you had a group of successful advisors to share ideas with, solve problems together, and push each other to reach bigger outcomes. Well, you don't have to be alone. Hi, I'm Scott Hamilton, a Pareto coach, and I also lead the mastermind groups for Pareto Systems. Our goal? To help advisors achieve bigger, better futures faster than they could on their own. Through our mastermind format, what we call Collective Genius, we bring together successful advisors to share best practices, insights, and solve problems together. Some of our groups also are focused on specific niches, like divorce or M&A. All groups are led by Pareto coaches who've worked with hundreds of top-tier financial advisors. Ready for more? Visit ParetoMastermind.com for details and to check out our upcoming webinars. That's ParetoMastermind.com. Bigger, better, faster.
Okay, back on track. I have to think, because you think like an entrepreneur, advisors are entrepreneurs. If an advisor is engaged with clients that are business owners, well, and professionals and executives, does any of your strategic planning around tax efficiency trickle down from the advisor and expand their thinking around how they consider tax efficiency with their clients? Do you ever hear that?
Yeah, I do. It really depends on what the client base is. A lot of times, like I'll have advisors when they're in the midst of things, they'll ask me about, I have a client that's having this situation. What do you think about it? And, can give them some kind of frameworks to work through with some of those kinds of issues. Or, this is what I would consider when approaching whatever this problem is that they're dealing with. And it does, especially if they serve business owners, a lot of it trickles down. A lot of it is useful. In the US, it's kind of a two-tiered system between, if you have people who are W-2 employees, they have very little control over what's going on with what's hitting their income tax returns, unless they're going to start getting into some mechanisms to shield that income in another way, beyond just like retirement planning, which I don't really consider retirement planning you do it for, do things on the tax side for some income smoothing there. But for the most part, that's just like a deferral game. But for them, certainly there's a lot of things that trickle down, especially as they understand more around what makes different entities appealing and how those rules work and what kind of record keeping systems are going to serve them better, and how do they need to be doing their own compensation and different things, that are available for them once you're out of the bucket of employee and you're in the, business owner seat. You've complete control over your tax liability because you have complete control over your income generation. So,
yeah, makes sense. Within your array of how you present yourself on LinkedIn, and when people start to get to know you, you have this position, and I don't quite understand it, I guess. But what do you mean that taxes are optional? Like, what does that mean? Or help me understand that.
Yeah, so it's a little tongue in cheek. So when I say taxes are optional, what I mean by that is I think people get into this false mindset of losing agency around income taxes, and they think income taxes are something that happen to them rather than this is a game with set rules. That if you behave a certain way, you get a certain outcome. It behaves by rule of law. We're playing a board game. And so once you realize that, I'm playing a game, I have agency here. This is something that if I can change my behavior, I can change my outcome because this behaves on a set of rules. And so when you're paying income taxes, it's not this thing that just, snowfall comes upon you and you have no control. You have agency, especially as a business owner. Or, and for advisors that are running their practices, you are generating the income that is triggering the income taxes. And you are specifically generating that's generating those income taxes. And depending on where you are and what you're trying to achieve in your practice, that income tax liability is something that you are the person generating that. Obviously, like, we don't make the laws and we can't control, what the rates are and things like that. But you have agency to control that number. And it's one of those things, early on in the planning process, I start with, we got to figure out what that number is if we did nothing. Where are you at today if we just did nothing? And then the second question is, are we happy with the number that we get? If it's going to be $100,000, $500,000, $1 million, whatever the tax liability is are we happy with this? Is this worth, this is the outcome of the game currently. Do we want to change things to try to reduce this? A lot of times the answer is yes. A lot of times the answer is no. It just depends on all the other factors of what's going on in the business. But I think when I say taxes are optional, it's that get yourself out of the mindset of this is something that you don't have control over, because you do. Like, your actions are the things that are directly generating this. And so you can have a plan around it, and you can change your actions to change the outcome in the game.
Well, that's a very empowering perspective. I mean, I jumped to my own conclusion when I read that. It's funny, a friend a while back sent me this little window, some research that was done on the origins of the IRS, like when it started. And if I remember correctly, I think was income tax originally proposed to be temporary? Was that a
I think
going?
that's right. Yeah. It's a relatively new thing.
What's that saying? Nothing's more permanent than a temporary government initiative.
That sounds right.
Well, but okay, but I like your mindset because it is empowering because I mean it is a game. Of course, the burden is on us to get it right and to collaborate with experts to help navigate and sift through it all so that we are in the driver's seat to the degree we can be. But I like the strategic and the proactive element of this instead of just reacting. And I'm sure that's like in between there is where a lot of leakage happens and people do overpay. I also like again, coming back to the fact that just making the advisor expand their thinking around how they interact with their clients. Because here's the thing, I'm curious, and don't answer yet, but I want to know sincerely how accountants perceive financial advisors, because generally, a lot of accountants I've met and advisors I've spoken to, the accountants are not entrepreneurial.
No.
Somewhat, there's a relationship dynamic, but it's very transactional and very compressed within a timeline. It's not the same as being a financial advisor, especially with advisory and the recurring, the ongoing relationship. But a lot of advisors they say, okay, I'm going to expand my network of COIs, right? And I'm like, okay, but that I want to change that and make it more collaborative. So we use the branding of having a value-added support team, engaging other service providers into the advisor's process. But, every now and again, and I'll get to the point here, we'll see an episode where it's almost like the accountant, and I know they're just doing their jobs, but almost sort of undermining the advisor sometimes. Like an advisor gets a phone call from a client. And the client says, hey, I just met with my accountant and he just told me I paid you $62,000 last year. Could that be right? And this is an advisor that had a pretty meaningful relationship with his accountant, but now he's playing defense and maybe he should have been more proactive on his fee worthiness and the value cost dynamic. But I'm curious, net, how do accountants perceive financial advisors?
I think a lot of this comes down to, it depends on the scale of where the relationship is and what kind of tax professional they're dealing with. Because I think there's a couple different buckets that tax professionals can go into in my experience. And it's definitely a person. I'm very big into personality typing and understanding people cognitively. And I think a lot of the blowback that advisors experience when dealing with accountants is because typically the profile for an accountant is they're very traditional. They don't like change. They don't like change out of the status quo. How we've done it is the way we're going to do it. Very much that mindset. And so when you bring in creative ideas or planning or things like that, they have a kind of, and this is just very broad brush, they can tend to have a very smallness of mind in terms of how they think about the value that they create, how they think about the value that the advisor's creating. Because, even a lot of CPAs, like for instance, I don't do hourly billing because I think that disincentivizes the kind of relationship that I want with an advisor. And a lot of CPAs a lot of tax professionals will give blowback to people that are doing value billing because they say, well, it's, how could you charge those outrageous fees? It only takes you X amount of time. And it's like, well, it's not about the time, it's about the value. Like, I've spent my whole career learning this stuff. How do I get compensated for all of that? Right? It doesn't matter. And so I think with advisors, they tend to be different cognitive profiles where they're entrepreneurial, they're extroverted, they're really, they aren't afraid to ask for what they're worth. And so they can run into this challenge with the tax professionals, because the tax professionals are very scarcity minded. They're very, overly cautious. So not like in a positive way, but I see tax professionals sometimes where they'll advise people against doing things that are like tax planning moves that are just like well established in the tax code and have been through tax court and totally fine, because they didn't want to take the time to learn how to do the whole process, or, it's something different. And I encounter that a lot, but it just depends on the tax professional. But those are, kind of the stereotype generalities. And so I think for a lot of advisors, the way to, kind of break out of that is having, you need to be really selective about the types of accountants that you're working with on a COI basis. And you really need to make sure you have alignment around what's going on with this person's mindset and how are they viewing things. Because like that situation you mentioned, I was talking to an advisor yesterday where he said he had a client, really good prospect for them, $1 million, AUM ad. And they had done all of this forecasting and projecting for basically the client's RMDs and how, they were going to get walloped in the tax. And so they did all these, forecasts and projections and said, okay, let's do some strategic Roth conversions. And I don't have all the details to know whether or not that was good advice, but he said the client went to their tax professional, and the tax professional shot it down without even having a conversation to him and the team to understand why or to see the projections, and is just like off the cuff, and then he lost the prospect. And I'm like, that's so typical. Because you see the tax professionals where they're like, well, I don't know, that sounds like a lot of work. Let's whatever. And then I'm sure the advisor was recommending something where it was genuinely going to have a better outcome for this client, because he did all the projections and holistic plan and really worked the numbers and figured it out. And, the tax accountant, probably after not having done any work, just said, I don't think that's a good idea. And the client went with the tax professional, because I think it's just in the client's mind, there is a level of trust with tax professionals that I don't think advisors feel that, where if the tax person says something, the clients, I think it stems from a fear of the IRS, or just how our industry is regarded, that people tend to trust us more quickly. And I don't know that trust is all that is well placed, but it is what it is. I think there was a group that actually did a study recently where they had a tax practice internally with their advisory practice, and they sent out emails to the clients and did a test to see, and it was the same email. And the tax team got responded to 4 times higher than the advisor team, and the open rates on the emails. And so it's just, that's what advisors are battling against, is those perceptions, and it's challenging.
Yeah, that's actually many layers of enlightenment and insight there. As you're talking, it reminded me, because I say to advisors, like, be incredibly forthright and transparent around how you're compensated early in a relationship with a prospective client, because their reaction is indicative of whether or not it's going to be a good fit. Like, how you start a relationship will have so much impact on how it will play out. And then, of course, don't negotiate your value to try to win someone's business, because that's a flawed beginning. But you reminded me, and this is the whole concept of fee worthiness and discernment. You probably heard this before, but there's this sort of urban legend about Picasso being
I know this story.
I love this. Like, he's on the streets in Paris, and somebody recognizes him, and she says, "Would you sketch my portrait?" And he does, and it takes him 5 minutes. And then he presents her with a bill, call it 1,000 francs, and she has sticker shock. And she said, 1,000 francs, it took you 5 minutes. And he said, no, it took me all my life to do this.
Yeah.
And I just love that perspective on the incrementalism of judgment, discernment, wisdom, value. Because it's interesting, it's not uncommon with an attorney or an accountant. After that first bill, it's generally sticker shock. Like it's generally more than you thought. And now it changes the dynamic where now you're mindful of the clock watching.
Yeah.
If it is the hourly rate, I like the concept of a retainer that encompasses all the value-added services around strategic planning. So that's interesting. And the last thing I want to ask you is because, and I think you already answered this, but for a lot of advisors who interact with accountants and lawyers, when it comes to introductions and advocacy, it's often a one-way street.
Yeah.
And it's probably like you're saying about personality styles, the advisor is entrepreneurial, they're high energy, they're always sort of keeping their eyes open for opportunities. But of course, the others are generally not. So any other insights on the aversion to introducing a client to an advisor? I'd love your perspective on that.
Yeah, I think with a lot of tax professionals, the reason why it tends to not go the other direction is I think a lot of tax professionals misunderstand the value that financial advisors bring too.
Right.
I think a lot of them just don't understand their world. They don't understand what they're doing. A lot of them are like, well, why don't you just, park everything in an index fund and call it a day? Like they don't understand what goes on is a big part of it. And I think a lot of the accountants just see it as like, oh, this isn't my job. I am here to get the paperwork filed on time and make sure that this person is not going to get in trouble with the IRS. That is my job. And anything that's activities beyond that tend to just not get paid attention to. Like I was having a conversation with an accountant who's an acquaintance of mine over the summer, and we were talking, I was talking about my practice and talking about him. And sometimes like I just sense this a mile away with another accountant, and I'm just like, I'm not even going to try to explain myself, the fact of how we run things and how we do things. And just, I think the typical accountant model of it, anybody who comes in off the street, they'll take them as a client if they're going to pay for the hourly fee. And they tend to have a lot of issues when it comes to how do you actually structure a CPA practice or a tax practice to be an efficient business model and deliver good value for the clients for what they actually need, like what the real pain points are. Because everybody's coming, it's like we sell a service that people have to buy in a way. Like it's filing your taxes as a non-optional thing. People have to do it. It's not a choice. And I think a lot of accountants will just leave it at that of just what the non-optional thing is versus how do I actually take the knowledge that I have and enrich this person's life? And they get skeptical of that kind of behavior from other accountants. And so it can be, on my side of things, it's growing. I think it might be a generational thing, but there are definitely more now than there were that, understand that you being entrepreneurial in your own practice as a CPA or as a tax professional is going to produce the better outcomes for your clients. It's going to produce the better outcomes for your teams. It's just going to produce a better product. It's more valuable, and that you need to be thinking about, the overall service delivery model and not just, the basic need that people are showing up for.
Yeah, no, it makes sense. And fair point also about the blowback dynamic. I mean, accountants are typically high in their risk aversion, but there's probably an element to assessing an alignment of interest between a client and an accountant is the difference between a technician, right? Strong technical ability, but not strategic, not future pacing. So I think that's interesting. Probably part of your wedge dynamic where somebody can compare and contrast a relationship with you versus their current provider is that strategic component and also industry knowledge, which only can come from mileage. You can't learn that in a simulator. So interesting. Okay. I've got one more piece that I want to focus on around enterprise value. But before I do, how can somebody connect with you and get to know you better? I mean, LinkedIn for me was incredibly helpful in the early days, but what else can somebody do to get to know you better?
Yeah, so I've got a podcast, which Duncan's going to be on next month, which is the Financial Advisors Want to Know podcast. We do a lot of episodes on there, so feel welcome to check that one out. But probably I would say the best thing is if you find me on LinkedIn, you can send me a DM or just, connect/follow on there. I have a newsletter that's going to be going out in 2025, and
Nice.
it's the same information that I give to my own clients. So it's not a marketing piece. It's purely here are situations that I'm seeing. This is what you need to be aware of. Here are different webinars and things that we're doing, because 2025 is going to be a very volatile year for tax. Like that's just, we have some huge provisions that are getting ready to expire. There's going to be a bunch of tax legislation. I feel like every time Trump goes somewhere, he promises like a new tax. So we'll see what actually ends up happening, but it's going to be a really volatile time for advisors. So I'd recommend signing up for the newsletter, just because with the algorithms, you're always subject to what the algorithm thinks is important to serve on your plate versus if you do something like an email as a newsletter. It's like, I've deemed this as, you need to read this and this is important. So it's not like, we send it out once a week. I send it out when there's important information that you actually need to hear, that I tell my own clients. So that's probably the best way to get us. And then in addition to that, like I'm planning on doing some more webinars and things in 2025, especially, we're going to be doing some segments on M&A and acquisitions and sales of practices, because I get a lot of questions around those. And a lot of times I just want to be able to direct people over to a webinar and say, watch this, and then we can have a conversation if this is, really where you're at. So we're going to be doing a lot of those pieces too. But send me a message on LinkedIn. I'm always interested to hear where people find me, and that's where I'm the most active, and you can get the most stuff from me is LinkedIn.
Yeah, fantastic.
If this podcast resonates with you, then you're likely the kind of advisor who strives to be indispensable to high net worth families. In partnership with Pareto Systems and the Institute for Preparing Heirs, we're offering exclusive live training to become the most trusted advisor for high net worth families. The Great Wealth Transfer Program equips you with the training and tools to secure and enhance multi-generational relationships. It's about becoming not just an advisor, but the most trusted advisor. Join us for the live training. Visit paretosystems.com/IPH to learn more and register today. Info can also be found in the description of this podcast. Again, that's paretosystems.com/IPH. Position yourself as the trusted advisor for generations to come.
Yeah, fantastic. And back to your point about 2025, I mean, it's all interpretation. I mean, volatility creates opportunity. There's always a bull market somewhere. So I think your advice is, as a financial professional, to get out in front of and be strategic and proactive around these nuances that will affect them and their clients, and be proactive. Don't just sit back and wait. So that's great. Okay, so actually I've got two things. I want to leave on AI, but before that, I want to talk about enterprise value, because many advisors are starting to think about their exit strategy, their end game, their continuity and succession approach. And of course, you've got to get out in front of that and plan that effectively. We have a very simple framework. It's be at the top of your game, and top being an acronym. It's like staging a house, like just get way out in front of it. So top is tidy, optimized, and proprietary. Make sure nothing resides in anyone's heads. Everything's documented and proprietary. Everything's refined and quantitative and qualitative in terms of what it does, cause and effect, fully refined and optimized. But then to you, I'm sure the tidy part, things that have been sort of put into the closet, neglected, all the different elements. Do you help a financial professional plan for their exit strategy?
Yeah, it's something that it's a part of the first conversation that I have with any advisor that comes in. It's a part of my assessment process. I'll ask them, the first thing I look for is, do you have a continuity plan in place? Like if something were to happen to you tomorrow, what happens to the practice? Okay, that's our immediate first need, is that needs to be sorted out. Like I just had a horror story from an advisor I was talking to where a family member of his had his own advisory practice, had $100 million book of business, good sized book of business for a solo, and unexpectedly passed away. He was broker dealer, and within 2 days, the broker dealer had farmed out all of the accounts to other advisors, and the man's widow got nothing. There was no sale agreement, nothing. All that value, and the practice was saddled with debt at the time. So she was saddled with debt, lost the whole nothing in the midst of grieving. So I always tell people that's the first place we got to start, is making sure you have a contingency plan in place, especially if you're a solo, that you have a contingency plan in place if something happens to you. But then the next question after that is, have you had evaluation done? Do you need evaluation? What's our starting point? Where are we at today? Because a lot of advisors, though, they have no idea what the asset's worth. And it's like, this is the biggest asset in your portfolio for most of them, right? It's the value of this practice. And so, like, wouldn't you want to know what it is? It's not that expensive to have a valuation done. And the valuation will usually reveal a lot of the weaknesses in what's going on as well. And then from there, the next question is, okay, do you want to do, what are we thinking about for exit planning? I know that you want to, leave the business in 5 to 10 years, but a business that's good to sell is a business that's good to run. And if you know now, what are the pieces that you need to strategically tackle in order for you to be able to have a successful exit? We should focus on those things now, because that's what's unlocking the most enterprise value for you is probably the things that are going to improve your quality of life as an owner. So those are probably, once you get up out of the technician seat, you've got some bandwidth to start doing those things. Those are the pieces that we just start attacking is, okay, how are the books and records? Like, we got to work through the whole progression and find.
And you've got a protocol, you've got a progression, a checklist, like a flight plan sort of thing. Like, okay. See, this is where it's not just checking boxes, it's strategic planning. I mean, for me, like staging a home, I mean, I know people that have actually had, like, they were getting ready to sell a home and they went out and hired a home evaluation service to come in and find the flaws so they could address the flaws before they even listed the house.
Yeah.
I mean, that's just being in the driver's seat on so many levels. And psychologically, that has to be liberating to know what you've actually got, to demystify what you've addressed and what the value is as you're conducting yourself, even if your exit strategy is 3, 5, 10 years out or an unknown. Just the peace of mind, as you said, that's powerful. So again, I appreciate your discernment there. That's excellent. Question for you regarding AI. How are you embracing it? I know.
Oh, I'm in love with it.
Okay. Again, I'm not surprised. I love that too. So let's end on just your perspective on AI.
Yeah, it's challenging for advisors compared to my industry, because we're not, believe it or not, tax professionals, we're subject to way less regulation in how we do things compared to advisors. For someone to file, a lot of people don't realize this, for somebody to file a tax return for somebody else, the only thing that you need really from an IRS perspective is a P10, which costs $20 and it takes about 5 minutes to get from the IRS. That's the only legal requirement that you have. So, we have a lot less limitations in terms of, how we operate. And there's a lot of, there's best practices, things like the AICPA has standards on data security and, document security protocols and things like that. But it's common sense things. It's not to the level that advisors have to deal with the SEC and FINRA. And so when I talk about AI with them, I feel kind of bad because we have access to a lot more tools than they do, just from a compliance perspective for that. But there are a couple, so I've had a couple podcast episodes, and there's actually an upcoming one that we're having that's another AI related one. But there are tools now that are finally making it to market that advisors are able to use. The biggest one that I've really enjoyed implementing initially has been meeting recorders, with being able to pull the summaries out, because then I'm able to be way more present in the meetings and not just clickety-clack taking notes. And then on top of that, when I send things back to my team for execution, they can get the exact words that the advisor said around specific questions, and being able to query it. And being able, for us, we save them all into our CRM so that it's, okay, when I'm going into the next meeting, I'm reviewing the last meeting, and it just saves on that admin time. And I know for advisors, that's probably the biggest initial value add is that piece. So there's a tool that I don't use, but they're approved by LPL. So very likely they could get approved by your compliance, or if you're an RA, your CRO, or your CCO. And that tool is called jump.ai.
Yeah. And
that one is a similar thing where it, plugs into your CRM. And, I was talking to Parker, the head guy over there, and he was saying that it's saving, on average, it's saving an advisor like 2+ hours per meeting between them and then their admin team. And so
perfect recall and demonstrable to a client. Like the client sees it after the meeting in terms of the
it's so
quality of the
impressive to
communication.
the client.
Yeah. Okay. Well, I'm glad you've embraced that. Let's make sure we talk about that in our conversation in the future, because I too am in love with AI. I mean, for me, it can put a financial professional in the red zone on so many levels, and their team, dealing with the mundane and the minutia and standardizing some of that, but also in terms of building out their playbook and their processes. That can be accelerated dramatically. And then, the AI, the high-tech, high-touch dynamic, I think a knowledge for profit, fee for service professional, AI can actually become part of the fit process and part of the sidecar deliverable to go deeper into the relationship and the high touch sort of bedside manner elements that clients really appreciate. So I'm not surprised that you embrace it as well. That's great stuff. I still have a lot of things to cover here, but I think we're going to have to park it for a future call. But great job.
Sounds good.
Exceeded expectations on every level. Very, very impressed. So I want to have you on a mastermind. I think advisors need to expand their thinking around all of these dynamics. And please make sure you see Catherine on LinkedIn, get to know her better, subscribe to her content, and have a conversation with her to see if it might be a good fit. Okay, so Catherine, great job.
Yeah, thank you. You too. I always tell people, like, when we're having to talk about taxes and things like that, I almost feel like I should be showing up in a big bird suit. Like how do you actually make something that's engaging for people to listen to? So I appreciate the, how you conducted the interview and the opportunity to be here and speak to your audience. I really appreciate it.
Well, thanks. Excellent. Well, I look forward to our chat in 2025.
Thank you for listening to Always On with Duncan MacPherson, where our objective is to enable professionals to always be working on their business and on themselves. Want to learn more about Duncan and his team? Visit ParetoSystems.com. Don't forget to click the follow button below to be notified when new episodes become available. The information covered and posted represents the views and opinions of the hosts and/or guests and does not necessarily represent the views or opinions of Pareto Systems. The content has been made available for informational and educational purposes only.